In 2008, he moved from New York to Las Vegas and established OMNI Trading Academy, where he teaches select students the OMNI triangulation and trading method. He's filled with vast knowledge of trading, analysis, and trend information or trend formation. By simply following trend lines and identifying formations, the chart will tell you all you need to know. As he said before many times, the chart is just a graphical representation of the day's news. Ladies and gentlemen, here to present, according to the charts, not the word on the street, is Mr. Oscar Carboni of OMNI Trading Academy. Welcome to Traders Corner, Oscar.
Thank you so much. Thank you for having me. Traders Corner is fantastic. I actually don't mind putting on a camera if that's possible here.
Feel free, and if not, I'm going to play with the settings that allow you to do so if I can find them, because they just changed the app around a little bit. And
I'll turn it off and back on again. Maybe that'll help you.
Try clicking your sprocket up at the top right if you're using a mobile device.
No, I'm actually on a computer.
I don't know how to find it on the computer. If you go to sharing and we'll drop down audio dashboard, attendees. I don't have a camera, so I don't know. But if you look on the left of the control box, there's like a phone and then a camera.
Uh-huh.
Try clicking that camera.
I've done it. Doesn't seem to come on. All right. So then we'll just deal with it without it.
We might have to make you do it ghost, but we know how handsome you are. We've seen you before.
All right. So looks like it's time for me to just get moving because cameras aren't coming on. Traders, good afternoon. Thank you for tuning in. Traders Corner, thank you so much for having me. Great, great stuff. I know that time is valuable, and you've spent your time here on a Saturday, which couldn't possibly be good for you unless you've gleaned something that you can use this week or next week, I should say, to help you make money moving forward, right? That's what we're all here for. Figure out where market's going to go. What can we use to help us get there? Well, again, my name's Oscar Carboni, and I will tell you this. If you leave here today with a few tips and techniques without having to buy anything, which you can then use next week to make money, then your time was spent really wisely on this Saturday afternoon. Wouldn't that be correct? Well, that's exactly what I have planned for us today. If you like what you see in this presentation, come join me at livewithoscar.com. It's absolutely free site. I am there 24 hours a day in a live trading room, and no credit cards required, no nonsense. Just come join me, and you'll see what it is we do every day. So what are we going to look at? Here's what we're going to look at today. Where is the market going? Why is it going there? And what can we do to capture where we're going next? So I have been contending this entire year in my webinars, in my live trading room every day, and my YouTube videos, which I film just about every night, that this market is going higher this year. And you have to know how to read the charts, because you can't just read the fundamentals looking at all this horrible news and think that that's going to be right. A chart is merely a visual look at everything that's come out. I'm talking about government reports, third quarter or whatever quarter a company is reporting. I'm talking about just about anything that comes out, and traders' reaction to those reports is all built into this chart right here. And it's quiet, and it's simple, and it doesn't have a reputation. It doesn't have child support or alimony. You know what? It knows everything that's going to happen next because it's pure. And let me show you what that means. Where is the stock market going? Where is it going to go? It's the biggest question that Wall Street has, and they pay tens of millions of dollars to analysts every year to figure out where this is going next. And here's what I'll tell you. With a good pair of eyes and a good chart read, you'll know exactly where market's going next. What does that mean? Let's go on a little journey, and I'll see if I can show you that. Before we get started, please remember that trading is risky, risky, risky. Never trade without stops. Put protective stops in first. Anything can happen. News can come out. You can be wiped out in this game just like that. Put your stops in and protect yourself. Live to fight another day. So, 30-year bond chart. This chart depicts where the 30-year bonds are moving, and it also will tell you if interest rates are going up or down. Interest rates are dropping. This propels the stock market higher. How do we know they're dropping? Well, take a look at this channel. Interest rates drop when bonds go up. It's an inherent relationship. It has to be that way. Jerome Powell doesn't have to say a single word for rates to go down. All the bond market has to do is go up. How do we know that? Very simply. Remember when they were raising rates? Well, when they were raising rates, the market was going down. That is what happens. When they lower rates, the market goes up. Well, the market has been going up like crazy, and that is dropping interest rates. Now, what you're looking at over here is a little teeter-totter or a seesaw, if you will. Let's say we're out in the park with a seesaw. What happens is if the bond futures go up, interest rates go down. That is what happens. It's like having a skinny kid and a heavy kid on the teeter-totter. One of them sits, the other one goes up. Well, that's what happens. When bonds go up, interest rates go down. The Fed does not have to do a thing to make that happen. Traders alone can move the rates. So we've got bonds going up, right? Well, that tells us at least it should alleviate some pressure on the stock market. What else do we have? We've got crude oil falling apart. And when crude drops, it is an absolute immediate stimulus worldwide in everyone's pocket. Every company, every person, I don't care if you're driving an EV, you still need energy to run your house, to do everything else you do in your life. They need energy to come up with that electricity for you. Everything gets a stimulus when crude gets cheaper, everything. And look at how crude has just been falling apart. So falling interest rates and crude oil dropping equals higher stock prices. That is absolute. There is no question as to whether or not we're going higher. Now, markets don't go one direction ever at one time in one straight direction. So you get up and down movement along the way, but the scene is set and the seeds have been planted for the stock market to continue higher. What else would prove that to us? Take a look at this. If you recall, the height of inflation, which made the Fed start raising rates and trashed the stock market, you had the commodity index, which is an index of inflation. It tells you if we're having inflation or not, disinflation, if you will. Well, at the height of inflation, we were at 140.55, right? Look at how this inflation, I call it a deflation index at this point, has just fallen apart all the way down. Look at this thing go. Just falling apart. Let's take this little circle and just follow. Down it goes, right? Down, down. Well, this is alleviating pressure on stocks, on people's wallets, on everything. It's at 97.89 currently. It was 140.55 when this madness started at the beginning of the year, or I should say 2 years ago. So now that inflation has come down so much, we know the supply chain problems are over. Bonds are soaring, which is making interest rates drop. Crude is dumping, which makes, of course, stimulus all over the world. What does that tell you? Well, that tells you that the stock market wants to go up. And that's where it is going. So you're looking at the E-mini S&P daily bar. There's a lot of stuff on here. Let's remove some of it for now and show you what's happening. The beginning of November, depicted by this line right here, is the beginning of November. The S&P was at 42.38.5. At the end of November, depicted by this line, S&P rallied from 42.38.5 to 46.57.75, up over 419 points in the month of November. So now we're wondering where we can go in December. Let's take a look. So November's over. Let's get this out of the way so we're not confused. Beginning and ending of November. Let's get that out of the way. Now we're going to look at the beginning of December and where we are now. December begins at 46.12.75. It's traded all the way to 47.81 so far. It's up 168 points for December. You know what that tells you? At this pace, it goes at least to 49.50 to 50.50 before December is over. That's minimum where it's going to go. I've got a higher target than that I called at the beginning of the year, which we'll get to. We're starting to close in on that target. Realistically, before we ever get to my higher end target, this projects to 49.50 to 50.50 watch S&P before the year is out. Now, nothing goes straight up, right? You go up, you get sideways, a few down days, and you go up again. So we don't expect it to go up every single day, but you should at least get here before the end of the year. Now, please write down some of these targets. I'm going to give you targets and tips and things to use to move forward this week coming to help make money. So write some of these down and we'll find out if the charts are right or wrong at the end of the month. Once again, falling interest rates plus crude oil dropping, plus don't forget the Wall Street bonus round. Wall Street fund managers basically buy all the stocks that have been performing well in their portfolios in December and kick out the ones that are not. The ones that were performing poorly get kicked out, and that creates a rally. So between falling interest rates, crude oil dropping, and the Wall Street bonus round coming at the last 2 weeks of December, stock prices are moving higher. That is absolute, kids. That is where we're going. There's more proof, I promise you. So just to let you know, we'll get to it towards the end of this little presentation. When I called for my high-end call this year that S&P would go up, market was at 3,800, and I was considered a crazy man, a lunatic. I'm making projections, not predictions. Predictions are for crazy people. Projections are for a very good chart analyst to call off of the chart, which happens to be me. So at 3,800, in the beginning of this year in January, I posted my projections in my YouTube videos, on my whiteboard, in my trading room, been there every single day since the beginning of the year. Now we are starting to get there, and I simply use the same charts I'm going to show you now to make this happen. Let's continue on. So even the S&P is looking good. What else gets moved up when interest rates drop and crude drops at the same time? The Dow. Now this is the market. This is the market. It's the Dow. So let's look back. We had a serious resistance line, and we were just falling apart, dropping, getting near the line, dropping, hitting the line, serious drop, near the line, drop. And then it finally gets above, and something happens. We end up with a gap. And as soon as we hit that gap, you have seen this chart in many of my videos since 11/14, kids. The day we hit that gap, I said, say hello to Santa. The rest of my analysis tells us we're going to go. That was 11/14. The gap starts. We go into one of these. An Oscarism known as an F flag. We will get into that for now. But I call this an F flag. Let me make that a little thicker for you. So this would be considered an F flag. It's, you know, this consolidation right here with the quick upwards run, then consolidation. So we get that. We're in this green channel, holding beautifully. It goes into a bull flag after the F flag, right? Runs up from the bull flag. What are we in now? Another F flag. Look at that. Another F flag consolidation is what should take place now before the big major rally continues. It looks just like this. It will work just like this one did. Repetitive patterns are the cornerstone to accurate technical analysis. You've got to spot the patterns. So Dow Industrial is having a great time. Even the S&P is having a great time. It's being brought to you by, of course, deflation, what I showed you in the commodity index chart, by crude dropping, and by interest rates dropping with bonds rallying. What else is going? S&P is going, Dow is going. Let's see if the NASDAQ looks as pretty. NASDAQ absolutely, positively looks just as pretty. Now, we had a double top in the NASDAQ. This is a chart I've been using for weeks on end of my videos. We talked about the double top, and we talked about how it hit that double top and had its reaction. And the day of this reaction, when we put the circle here, we got an OMNI buy signal and started getting buy signals, and that gave me two projections in NASDAQ. You might want to write these down. One's been hit. When we were down here at 15 and change, we gave two projections, 16,400 and 17,400 in NASDAQ. We hit 16,400 3 days ago, and we will get to 17,400. It's on its way. The first target's already been hit. Now, these are projections, kids. These aren't being made up of looking at fundamentals and me trying to be intelligent about things. I don't think I'm smart enough to disseminate a fire hose of information coming at me 24 hours a day and then say, that means 16,400 NASDAQ. That's not possible. But reading the graph, that's possible. And that's what we're getting. So your next target is 17.4 in the NASDAQ. Now, NASDAQ looks good on the daily. Take a look at it on the weekly. NASDAQ on a weekly chart. It loves to bounce off the 200-ball moving average and start a major run. It does it every single time. Proof, come back here. Hits the 200-ball moving average, major run. Go back a little further. Just about hits the 200-ball moving average, major run. It happens the entire chart all the way back to 2008. Just about hits the average, major run. Okay, well, this time it did hit the average. Like this one, you are going to get a major run, and that has started. You know, of course, I have mentioned that this would happen for a long time. I've been showing the OMNI. Get ready for this. Well, we went into a bull flag. It worked. Secondary bull flag worked. Out of the bull flag, and look at what this is doing right now. Out of control, heading towards the 17,400 mark. So NASDAQ has joined in, and NASDAQ looks fantastic. So everything so far that we've looked at is pointing towards absolutely higher, especially for the end of this year. And now there's another little tip or trick I'd like to show you, a technique that I stumbled upon, you know, in the last few weeks looking at charts. Seems to be working really well. Went over it again last night. Let me show this to you. Another tip I hope you can use. Let's go with this. Let's try that again. So here's what we're going to look at. This could be any chart in the world. Who cares what chart it is? This is called a repetitive pattern. Now, repetitive patterns, here's one that we can put to use next week and make money with. What am I speaking about? So who knows what market this is? We'll call it XXX23. Here's what it's been doing. The repetitive pattern is this: quick rally, which is, if you ask me, a flagpole. Consolidation, number 2, the pullback, which creates the flag. What happens next? Number 3, another quick rally, which creates another flagpole. What happens after that? You get a consolidation, number 2. What happens after number 2? Number 3, you get another quick rally. You see that? It is absolutely repetitive. After the quick rally, number 1, right? The quick rally. After that, you go to number 2, the consolidation. What happens after number 2? Number 3, the quick rally. And look at this one. Boom, another quick rally. So what should happen next is what you're going to use next week. The sideways consolidation comes our way. Right there, you need to fill that in like you did here, and you did here, and you did here, and even on the way down, it acted opposite. Quick drop, consolidation, quick drop, consolidation, quick drop. It's a repetitive pattern and a characteristic of this market. So it's in a 1, 2, 3 pattern, very easy to see, very simple to put lines around, and you should be able to time when you should get into that the Russell next. This is Russell 2000. This is the Russell 2000 daily bar, and look at this crazy repetitive pattern. Yes, they're flags, but let's just call it repetitive patterns. And that is where we are now, right there. And you should be able to figure out what to do inside of these parameters. I hope that will help you going into next week. There is more, though. I spotted this in a few places. It's happening at once in 3 markets, and maybe you can use this technique in all 3 of them. So which one shows up next? Check this out. I think I have to change charts here. And let's go with, if I'm right. Yes, check this out. You are getting the same exact 1, 2, 3 repetitive pattern in the dollar index. Quick drop, number 1, right? Quick drop. Number 2, the consolidation. Number 3, the quick drop, red line. Number 1, well, it should be number 1, of course. So you had 1, 2, then number 1 comes back, the quick drop, the consolidation, the quick drop, the consolidation. This whole thing, if you ask me, is one big consolidation. Look, this whole thing looks to be a quick drop and a consolidation leading to the next drop. What do we do now? expect your consolidation. Now, if it's going to consolidate in dollar, what does that do for you Europeans out there and you Forex traders? It does some magic for you cats. Look. If you are, oh, in fact, it's a different one here. This one is 6E. Different sign. Check this out. If you are a Euro trader, get ready. Look at this. So we could start back here. Quick drop, consolidation. Quick drop, consolidation. Quick drop, consolidation. But old news, so we'll look at something different. Let's look at today, top day. What did we get here? Quick rally, consolidation. Quick rally, consolidation. Drop, quick rally, consolidation. Quick rally should come next. Consolidation, right? Stay inside here somewhere. And then up you will go. That is what should happen. It's exactly opposite the dollar. For you Euro traders out there, keep your eyes on this. This is what you're looking for next. Now, if this analysis seems simple to you, well, guess what? I am showing you simple analysis. In fact, I'm showing you analysis that I would call, for me, this is analysis class 101. I am laying on a cot, eating cookies and drinking warm milk in pre-kindergarten. That's what I'm showing you right now. But you know what? It's extremely powerful, as simple as it is. Now, of course, I've got an OMNI method that gets much more complicated than this as far as using it to get in and out of the markets, but that's not what I want to show you today. I'm not looking to sell that to you. I'm looking to show you simplicity that you can use over and over again for yourselves when you go home. And guess what? You don't have to buy anything. You don't have to download anything. You just had to look at the charts properly. And of course, if you lose touch with that, you come visit me in my live trading room and I'll show you how to view that better. But let's continue because this is not over yet. There is more out there. Now we're going to change programs again and let me show you something else. So let's look in here and let's go look at Apple. Is there something I could help you with this weekend to use on Apple next week? Absolutely. Apple is facing a double top test right now, which makes perfect sense that markets are looking to consolidate this week a little bit before they go higher, because you tend to consolidate or drop after a double top is tested. So perfect timing for this. Double top being tested in Apple. And guess what has been working? Probably the absolute best average I've seen in a long time on Apple is this simple 21 bar moving average, or algorithm, if you will. Look at how perfectly well it keeps Apple in check. I mean, it is what Wall Street is using. I am of Wall Street. I grew up on Wall Street. I was there from 18 years old in the trading pit all the way until I was in my 40s when it went electronic on the internet. I am Wall Street. I promise you, this is what they're looking at right now. Look at how many times you had a great trade off of this average. Then it breaks, gap, drop. Gets above, you see what they do? Gets under, stays under. Wall Street is using this. They're watching it like a hawk. And that 21 average is probably going to get hit if we have a little pullback consolidation. And if that's the case, use the 21 bar simple moving average to time Apple. It will give you a perfect buy. Wall Street uses it like crazy. So I want you to use it because Wall Street's the most powerful thing out there trading on markets, right, besides the Fed. And if they're using it, believe me, you should be using it. Another tip for you, use that 21 bar simple moving average on Apple. If it drops to it, buy it. If it gets under it, it's a sell signal. But Apple's a big booming bull market. I'd prefer to just buy only and not take sell signals from it. I hope that will help you. What else do we have? I've saved a few more charts I looked at yesterday, and I found interesting tips that'll help me next week, and I hope they will help you. Let's take a look at this one. Palo, yeah, let's go there. Palo Alto, look at this one. Talk about Wall Street giving us a gift. My goodness, this is giveaway stuff here. So look at this average. It's a 9-bar simple. Why would they go down to such a small algorithm? Because that's what the market calls for right now. And I don't care what they're using or what we have to use. I look at the 9 moving average, like the 18, like the 50, like the 200. For me, it is a wheel. It's already been invented. I put it on my car, and I go really fast with that wheel. Do not need to know why, how, or what. They are using the 9 right now. Why? Who cares why? Because they're crazy, but they're using it. And look at how well it works. 9-bar moving average on Palo Alto. Gets fuzzy right here for about 10 days, doesn't work. It's perfect again. Perfect, 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 perfect. Just perfect signals. Gets fuzzy, goes right back to perfect again. Guess where we're at now? Boom. We blow it up for you. We are there now, kids. That should be useful to you. 9 SMA. So take a look at that. I hope that will help you if you trade stocks or Palo Alto, particular stocks. PAN-W is its symbol, and I hope that's something that you'll write down and maybe will help you as well. Now, what else is being propelled by this interest rate move? And of course, with energy getting cheaper, it makes another market go up that you might not have even paid attention to. You know what that is? Bitcoin. You need a lot of energy to make Bitcoin. When energy gets cheaper, it makes Bitcoin get more buoyant. Now, that's not the only reason why Bitcoin's moving higher, obviously, right? But I got a little tip for you on Bitcoin as well. For whatever reason, right here, the 18-bar simple moving average becomes involved. Why? Who cares why? It just did. Wall Street adopted it right here, and I started following them, and look at, boom, work, buy. Boom, work, and hit the channel. Perfect, up. Hits the channel, up. Hits the channel, and almost the average, up. You are consolidating right now. You might consolidate the S&P or the Russell a few days. That will likely make Bitcoin consolidate. Guess where you're going to look to buy it? At the conjunction of these two. Because as another day or two passes, this average is going to move up a little. Let me see if I can help you out with that. It's not what I wanted to do. I'm trying to do a quick illustration, but I need to get rid of the extension. So check this out. What should happen next is the average should move a little higher or get a little closer, if you will, to that trend line. And when it does, you're going to be able to buy at the trend line and the 18-bar moving average. That's what I want you to use to time Bitcoin. We've got a target in Bitcoin, by the way, 85,000 in, by the way, it's not coming right away, 2.8 years, 85,000 Bitcoin. Write that down. Everyone who knows me knows that that's a target. And I gave this target out when we were, I don't know, at 12,000, whatever the number was. But we're going. You'll see it get there. What else is on this little list of goodies I had for us for the week? Oh, yes, check this guy out. Watch this chart. Now, I don't show this to anybody, but I'm going to show you guys to show you just how strong technical analysis and reading charts can be. This chart is generally for me. It's my personal chart, and it's notes that I write to myself throughout the year to figure out where markets are going to go next. So let's go back to the beginning of 2023. I literally came up with my projection, as I do every year, 15, 16 years straight. I put out a projection every year in January for what will happen in December. The 2023 projection gets made right here, 2023 begins, and it says ES is going to go over 5,000. Maybe we even see as high as 54 to 5,500. Well, guess what? We're in the middle of an interest rate rise. The market is crashing. Inflation is out of control. Inflation's out of control compared to the last 20 years. Interest rates are spiking, and the OMNI tells me it's going up this year, not down. And I've got to tell you that I write, boy, am I in trouble. These people are going to kill me. But I put the target out anyway. Now, we are trading at 3,800, kids. I don't know if anyone's even got the guts to put out a call like this, but we're at 3,800. And I tell my Omniacs around the world, guess where we're going? Over 5,000 to 5,400, maybe 55. I know I'm crazy, but I've been crazy. Every year I've been calling this for 16 years. It hasn't missed. So let's find out what happens next. What happens next is the market starts to go up. Now, these are just my notes for me, kids. Market starts to go up January, February, and it starts to crack in March. It gets scary down here. And I write a note. Oh, no, careful. Watch this like a hawk. We are close to a disaster. But it holds. Next note, support held. Thank God. But the market continues to move, and we end up with a gap. I leave myself a note. We've got a gap. Keep an eye on it. it gaps and runs up to this strange bullish flag. I put a note about that. And then I write this note. This is why you do not interfere, Oscar. This is me talking to myself. Do not interfere ever. Why? Because it's actually going up, not down, like everyone in the world thought it would do. Omni said it was going up. The chart said it was going up. I didn't even think it was going up. And look at that. Amazingly, right? What does it do next? Continues to go up from my 38 call, gets all the way up here and puts in the top one, drop. Comes up from the top, puts in a bear flag, works perfectly, drops, puts in a bull flag, fails. Terrible bull flag, does not work. I write myself a note, down we go, and I write another note when we get down there. Don't panic. Don't panic. It's still safe. Just sit tight, keep your eyes closed. Why is it still safe? Because we're nowhere near the lows down here. We don't have to worry about it unless we get under those lows. Don't panic, Oscar. All right, I won't. Look it. Once again, skyrockets up, 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 gets to the double top, which I call completely questionable. These are notes for me. You guys have never seen this chart ever. I write myself a note, questionable double top here. It probably will get above. It does get above. My last note so far for the year to myself is this one. Oscar, remember, you know the drill. The bonus round and Santa will do the rest of the work for the rest of the year. Just get ready. Now, this is a chart I've never shown anyone. I just keep this for myself. And look at how right as rain this chart has become. And again, it's not like I got some crazy special quality that allows me to make calls that anyone else can't. I am reading charts to you and telling traders who follow me every day and night around the world what should happen next. There is one thing I want you to look at, however. As rosy as all of this has seemed, and as beautiful as everything looks, we do have an issue that we're going to have to deal with, and write down this one. It's important. It's right here. We've got a weekly double top in the NASDAQ that hasn't been seen since November of 21. We are finally back there. And that will likely create that consolidation that we spoke about in the Russell 2000 and those three charts I showed you about that are now looking for a pullback consolidation. This would make perfect sense. If this is a double top and it reacts, it would make perfect sense that it's here right now because the market is telling us that we're looking for a consolidation moment. That would give us a consolidation moment. So keep it in mind, we could blow right through the NASDAQ and just continue on, but I want you to keep this in mind. It could create that consolidation we'll need to then blast off late this week or into next week. So this is what I wanted to point out. I hope that this presentation has put these charts in the proper light for you, has taught you a few tricks and techniques, and help you next week. Now, if you like what you've seen, you know how easy it is to find me? Go to livewithoscar.com, livewithoscar.com. If you have a registration, you already know this page, so you don't need to see this. But if you're new, simply register. I ask for nothing. You're going to fill your name, you're going to create a password, and you'll receive an email. Problem with email these days is they always go to spam. Check your spam, verify your email, come back, and you can just log in and join me in my live trading room. I'm in this trading room. Literally, it stays open 24 hours a day. You will always find me here. My camera's not on. I'm typing, but I'm always here, and so is my crowd from around the world. No credit cards, no nonsense. I do this because I want a crowd of you to hang out with me while I live my life and trade during the day like I used to do on the trading floor. The only way to get that done is to have a crowd around me. So I offer this for free, and I help people all over the world, and I want you to come join me at livewithoscar.com. With that, I will now give my time back unless there are questions to you.
Oscar, I got to make it to your room and hang out with you. This is ridiculous. I love your calls, and I can't ever forget when you called the bottom of the S&P 2 or 3 appearances ago on our show.
I'm just reading the charts. The charts speak the truth. It's the traders of the world that think they're smarter than the charts that blow this whole thing up. You have to know you're stupid in this game. The charts are smarter than we are.
You're brilliant, and you know the rule. The market can stay wrong longer than you can stay funded or solvent.
Got that right. And repetitive patterns, all the cornerstone to this craziness. If you can spot them, you're golden.
I am going to do one thing this week, and that's probably sell a couple of put spreads on Mara, and then use the money to buy some long-term calls on it.
So, of course, things change when markets get crazy, fundamentals come out. But this is the picture right now, top day, maybe a small consolidation, and upwards we go to finish out the year.
Now, I really believe that too. They say the Santa Claus rally, all of that, and I don't know how high it can go, but I'm scalping, calls on the SPY, the Qs, and some of the Magnificent Seven every day for some good gains.
If you ever need timing, just give me a call, my friend. I'm always here for you.
I really think I'm going to come hang out in your room a couple days. It's tough for me being, single dad and having all going on that I do, but your personality and just your expertise on the market and calls. I want to sit around and trade the tickers that you recommend a little bit.
Well, we'd love to have you, my friend. We have a lot of professionals that hang around us, and all new traders are welcome. I welcome new traders so I can protect them from the nonsense that's out there on the internet right now. There are so many kids showing their mansions and this and that. You can make millions of dollars. It's not true. Be careful out there.
You know the Jordan Buffett rule, right?
It depends on which one.
No one wants to get rich slow.
Well, you know how that works. Nobody wants to work for what they have there. It's got to happen like that. Especially
you got to make tens of thousands of dollars a day and get rich overnight.
Here's what I will tell anyone that's getting into this game. If you can train yourself to remember that base hits win the game, not swinging for the fences. 4 base hits is a home run. If you can keep your trading to base hits, you'll hit a home run every few days without ever swinging for the fences.
I recently opened up an account for my son, and I really believe in the electric vehicle market and the way the government is pushing it. So I bought a lot of what's called penny stocks, priced between $1, $7, $8 or so, 100 of each of them, and sold covered calls against them for my base hits.
Good
and I
for
know
you.
this week it bit me because I got assigned on every single one, but I'm going to do it again and again and again because I trust the method. And over 15 years, I'm hoping it's something significant for them.
So, you know what your best use of selling calls is, what they were made for. So get this. When options opened up, I was down on the trading floor as a young kid. Options didn't exist yet. They opened them up on the exchange and asked me to work in the first options booth to speak to customers and figure out how to even take orders and what to do with them. So I've been around since the beginning of options trading on the futures exchanges. And with options, you got to be really, really careful because don't forget that they have theta, which is money that you're going to pay every single day. That option's going to lose money every single day that you own it, even if the market's going up. So here's what options were really invented for. Let's say you get lucky and you have an IBM or whatever stock, and it's, you bought it at $3 and it's now $42. What you're supposed to do is sell calls against that position till the cows come home. You cannot lose. Nothing can happen to you except that you will make the money on the call, or at some point, the stock will go up so high that you'll sell it at the price of your call. In that case, you could just buy it right back if you wanted to stay in. So you're supposed to use options to milk the money out of the market once you have an already established winning position. That's the part everybody gets wrong. They try to make the money with the options. You're literally supposed to have a good position on and use options to milk that position.
I'm doing exactly that. And I found that I can buy them back because of the delta difference. They don't go up dollar for dollar with the stock. So the stock still made money. I bought the option back at a little bit of a loss, but I'm still at an overall gain because the stock gained, at a delta of 1 where the option was only going up at a fraction.
Yep, and of course that's always going to happen. Even if it's at the money option, it won't go point to point with the stock or the future because you've got the weight of theta on you. It's always charging you rent every time. Every moment you look at that option, you're paying rent to look at it.
Agreed. And Oscar, I want to ask you one thing for Venkata. He asked you if you'd bring up the chart for Intel, and I'd like to ask you to do that, and then we're going to wish everybody a great day.
Chart, of course. Let's just see how it will show up here. It's probably .go. Do you have a symbol for me? It's not showing up here.
INTC.
It might be a dot. Oh, once again, yes, it's okay. There it is. So what do we have here? We've got a beautiful looking stock here, right? I mean, who wouldn't like this? So don't know what this is. We'll just take a look at this average and see what it is. This is it's 18. Let's go see what it's, I mean, I don't think it's using an average right now. We'll just leave the 50 sitting there and see how far down we have to really get there. So now looking at this chart, obviously the simple analysis on here obviously would be to just draw your trend lines along the bottoms and tops, right? And see if you have an upward trend or a downward trend. So when we do that, you can clearly see that you've got an upward trend here, right? You put a bottom line there, you put your top line across here. Just simple analysis tells us this thing is bullish looking. All right, so now we got that. Then you start looking at where it is at this point, and you're starting to make channels now that are even tighter, right? You can now draw channels like this, and let's see if we'll give us a parallel to that. And this one is likely the top of that. Let's just draw it in and see where it goes. Again, extend rectangles. All right, so now let's pull it out where it belongs. So you have some kind of a channel building here. I would think that this bottom line is going to be rock solid for you because this has been going up for so long, there's no shot Wall Street is going to let this get away from them because look at the conjunction that you're going to come to right here. Support, and Wall Street, I promise you, is watching stuff like that. So if I was looking at this, that's where I would look for it. INTC, I'd look for that spot right there. You'd find support there because believe me, when Wall Street creates algorithms, by the way, algorithms, they seem so scary and that, you know, who knows what's in them and it's so secretive. But what's in them is the price action that you're looking at here. What else could be in there, right? They're looking at the same price action we are. Now that price action creates angles. These angles, they calculate, we could snap a trend line. It's the same thing. I promise you they'll be looking at that spot just like we are. That is what they look for, only they do it with mathematical formulas. I do with a pair of eyes. I find it much easier that way.
Cool. Well, Oscar, if that's all, I want to thank you for being here. I love your presentations. And like I said, I want to get in your room one day, but I have trouble getting anything done. But thank you for all the great information. Ladies and gentlemen, you heard it here on Traders Corner. According to the charts, not the word on the street, from Mr. Oscar Carboni. You can find him daily in his chat room. Join him for free. I know I'm gonna. Or his nightly YouTube videos, which are extremely fun to watch, or live streaming on his YouTube channel. He is as entertaining as Bubba. You can keep up with him on Twitter, StockTwits, LinkedIn, Instagram, Facebook, Discord, etc. You can go to his website, www.livewithoscar.com. And by the way, Oscar, I love your videos too. I try to have conversations with you in some of them. I think we can tell I'm a big fan. But great information, great sense of humor mixed in.
I reply to all your posts.
I'm sorry?
I always make sure I reply to the posts as well on the videos.
No, absolutely. I'd like to wish you and Lisa a happy holiday season, and I put your link in the chat box for everybody.
Thank you so much. You have a great holiday season. Everyone else, happy, safe, healthy holiday. And remember, stops are in. Emotions are out. Rock and roll, kids. Take care of yourselves.